following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Nick in Tampa. Hey, Nick, what's going on?
Tom O'Brien, it is an absolute pleasure.
Thanks so much, man. We appreciate you calling.
No problem. Dude, I've been listening to your show for about 2 years now, and it has just been wonderful. I listen to you, Basil, Andy. You guys do an amazing job.
Well, thank you so much. We appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, a safe day. Let's make it a great night, folks. And we are kicking into spring. It's a beautiful thing. Across this country, it's getting warmer. How's that? This quote is by Corby Yamada. Believe in the magic of tomorrow and the spirits. And your spirits will be lifted on the wings of hope. Market-wise, let's take a look at it out here. We have the Dow Industrials down 280. NASDAQ is off 69. S&Ps are off 30. Gold contract down $6, trading at $1,160 an ounce. Silver down 13 cents at $15.64 an ounce. Platinum off $18 at $1,129 an ounce. Copper down 5.5 pennies at $2.63 a pound. Light sweet crude down $1.46, trading at $48.53 a barrel. Bonds, we have the 10-year up 15 ticks, 126.29. 30-year up 1 full point, actually almost up 2 points at 158.20. And King Dollar. King Dollar's up 1,000 ticks at 98.60. That's an ABC structure up to 101. Euro down 152 at 1.06. We're getting into par. It's going to be really wild watching that whole thing shake out. Time to go to Europe. Time to go to the Amalfi Coast, folks. Yen flat at 121.10. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? If we go to the world of the S&P, we'll start out with the SPY. This is what you have happening in the SPY, folks. So we take a look at this on the daily basis. You gap down. Bottom line is that it looks to me we are not going to have the volume for an ABC structure on the way down. You took out the B point. The B point we're taking out is the low that was established on Friday, which is 207.10. Thus far, we've done 108 million shares, so this baby's going to bang out about 130 million. That's, of course, an expansion of volume. We made highs at 70 million. So where is this shaking out? Well, the first shakeout spot's going to be these swing lows out here. So I expect what you're going to get. You're going to get still the price expansion on the way down, meaning into your swing points. We're at 205.48. You're talking about somewhere in the 202 to 197 area. The NDX 100, if we use the 3 Qs and we take a look at the NDX 100, what you also have with the NDX 100 is this. It's trading at 106.04. We've done 25 million shares, and this is the one that, no doubt, now has come back inside the range. So NASDAQ, the NDX 100, is also showing, number one, it was a false break topside. That false break topside occurred on February 13th. That's when it went topside, had lighter volume. And the characteristic, folks, is there in spades. What I mean specifically is we made a high with 22 million. When we were up there for the week and a half, that's all I had was 22 million. And guess what? We came off that high, and we came off that high on Friday with 30 million. And the NASDAQ, the 3 Qs more than likely will do probably 30 million out here today. The IWM, what we can expect, by the way, folks, is as we get into this close here, that Dow Industrials, it was down 280, 275 right now. That wants to break the 300 mark. We'll get into that in a second, but it's really cool how that's trading. The reason being what I'm saying is this, is that 300 doesn't mean a thing. It's a psychological deal, but the bulls are fighting like crazy over the 300. They're going to lose. That's the bottom line. So we'll see how this shakes out. IWM, what do we have with the IWM? IWM is trading at 120.47. That is in the lower range. That is saying that that will go after this 115 to 113 level. Now, The indices. Indices out here today, what I expect you're going to see is this. The indices will end up doing about 750, 800 million, which is an expansion of volume, but not tremendous. NASDAQ's going to get a nice expansion, and we're going to do about 1.8 billion. Both of those numbers are lower than option expiration on Friday, but bottom line is that you have the price spread. They want to go lower. Now, gold contract. Let's go over and take a look at gold. What do we have with gold? Gold gets down to a price point out here today. GC. We're trading at 1160. We've gone as low as 1153. We have 167,000 contracts traded. Now, that's still high volume. We had 250,000 contracts traded on Friday. We're at lower lows, and what that sets up is that sets up a test of the 1132 area, which was the November 7th swing low. Silver. Let's go take a look at the silver market. What we have with silver is this. Silver market is trading at $15.64. What we have with silver. Now, if you remember, silver actually looks stronger than gold. Where the volatility comes in, however, silver can be much more volatile than gold. What silver has done today is this. We hit a low of 1558. We've done 30,000 contracts. On Friday, we did 44,000. So you're doing low volume. However, the spike low of 1470 in silver from December 1st is game now. That was a heck of a day in the silver market, there's no doubt. We went from 1470 up to 1683. If you want to see the correlation and you don't trade the futures and you want to see the correlation inside the GLD, it's a nice setup. Meaning the GLD, folks, Street Charts Trust, is down 49 cents. You have 6 million shares traded. You're going under the 11 million from Friday. You're coming into 10 million when we're dealing with the November 7th lows. What we also have is this. On a weekly basis, last week we did 34 million. The swing low is 44 million, and thus far this week we've only done 11 million. So you can see in the daily and in the weekly basis, you're coming into that swing point. You are coming in with lighter volume, but what we're going to need now is we're going to need a rejection of lower price. That's crucial in the context of how equities, futures, commodities, currencies trade. Bonds. This is going to be the wild one. Okay, so I'm going to use the TLT first so you can see how this is shaking out. And what we have happening is this. And my take on this, by the way, is that, and yeah, my take is definitely the bond market has turned, folks, okay? I'm going to be selling bonds as they rise versus the bull of looking for rates to continue to go down. Why? Because what we've done is this. We've come off the high 2 separate times with accelerated volume. When you come off a high with volume, what happens is that the correction is much larger than normal. And in this particular case, the 10-year came off the high on February 6th. Monster volume, we went from 130.11 to 128. We did it again coming downtown on the, let's see, on the 17th, and then we did it again on Friday. Bottom line, what does that set up? That sets up a counter trend bounce with lighter volume. That's exactly what we're getting right now. I do expect, I wouldn't be selling these bonds just yet. And this is why. I do expect this market wants to go south more. As the market goes south, you are going to get buyers inside the bond market. They want their money back, period. But what you're also going to see is that each and every time that the S&P starts to bounce, guess what? Bonds are going to get smoked. That's how it seems to be setting up. So this one's going to be really intriguing to see if, in fact, it's going to play out that way. The reason being is that if, in fact, that's what happens, that is a huge dynamic shift inside the marketplace. What it also does is this. Let's see. For the last 6 years, what we've had is that you've had the market up and bonds up. That's very unusual, folks, okay? When you're putting bond positions on and you have a portfolio that is a true portfolio, meaning you're basically have different asset classes. It's really unusual that you see equities go up and bonds go up simultaneously. Now, the really weird thing is that if, in fact, that the bonds have topped out, it's going to be really strange watching equities and bonds simultaneously go down. They go down at different times because they're going to be going down in the correlation of how the market goes up and down. But on a longer-term basis, you're going to see lower highs on a continual basis. King Dollar, man, is at 99.20. The 1-to-1 ABC structure is 101, and that baby is a straight line move, and it's going there. It's taking no prisoners. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll come right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Tom TFNN.com takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We get the Dow Industrials right now down 261. You get the NASDAQ running down. Where's the NASDAQ right now? NASDAQ's down 69. S&Ps are off 26. And as we do each and every Tuesday at 20 past the first hour, let's go to our man, Mr. Basil Chapman. And don't forget, folks, Basil has an outstanding newsletter. You can test drive it right here, right now, the way you do it. Go to TFNN. Go to newsletters, go to trading newsletters, see the opening call right there, test drive it 30 days absolutely free. And, of course, every trading day, 11 to 12 Eastern Standard Time. Basil has a great show. You can call in, talk to him whenever you like. Basil Chapman, what's going on?
Hi, Tom. How are you?
I heard it's 40 degrees up there today. It's a beautiful day.
It's starting to warm up.
Yeah?
Yep, we're getting there slowly.
Can you see a roof yet?
You know, there is still, I'm looking around, there's still some snow on some of the roofs, but I think over the last 2 days or 3 days, most of the snow has gone off the roofs, at least not everywhere, but at least around where I am.
Sweet. So what are we looking at today, Basil?
So I'm showing you the Dow chart right here, and when we last spoke, I said it made a peak E in the Dow, and that there was also a leg D in the weekly chart, and that to me was very important. So because of the action in the Dow, and I base a lot of my work on the Dow itself, having followed it for so long. For my subscribers, we did go short the Dow, and I wanted to show you something very interesting. There are two things here. Let me just expand this. Actually, I started writing tomorrow's report already over here, but the Dow hasn't closed, so this is not, the price is not accurate, but the action is. And what it shows is there's a candle right there. I call it the Chapman Wave Roman candle. And what happens with this candle here, when the wick is pierced by about half the length of the wick, there's a real good chance you're going to test the lows. And if you look at what's happened in the Dow from that high of 18,288, the very next bar on the that was the 2nd of March. On the 3rd of March, there was a slightly lower high. I call that a 2-bar reversal. And that often portends some kind of a deeper sell-off. And what happened was, once the wick of that Roman candle got pierced, it took out, that was on Friday, you had that sharp move to the downside. Now, if you also look at the way the pattern is formed, you'll see from the candle in the Dow, the candle of the 4th of March, the very next day there was an inside bar, but it's starting to go underneath that purple line, that 9-period exponential moving average. Then you had that very sharp sell-off, a very strong down candle, and look what happened. Yesterday you had another inside bar. It's like a little sandwich. And then today you've got this very sharp move so far. The Dow's down 261. The MACD, that's this technical tool right here. The moving average convergence divergence is still expanding. It's very negative. And the stochastic is still expanding. It's down. Before it was up in the 96% area, very good. And now it's down in the 30% area. So that's a negative. But there's a technique that I developed a number of years ago using Richard Arm's TRIN index, a short-term trading index. And today that trading index went to 259. And that suggests to me that we are very close. And you can see also by the trend line, that little dash, actually I usually make that purple, so I'm going to make it pinky there. That support is held. And this Chapman Wave trend gauge is suggesting that within 2 days we should have a very sharp reflex rally. That's all it is. It's a reflex rally, and normally what happens is that either overnight or suddenly intraday after pulling back, the futures start to rally, and you get a rally in the S&P E-minis of about 7 to 9 points, and that translates into the cash index, and that should help the cash index. So I think we're close to a bounce. And we'll see if there's another inside session tomorrow if the low of today is not taken out. But overall, what I'm looking at, and I'm going to now move to the weekly chart, this is the arch formation that you get. There it is in the Dow Daily. This weekly chart shows that, you remember I spoke about the resistance, that pink dashed line in the up channel, I call it the inside track. That became resistance, and that resistance says that this Friday, if there is a close below 17,800, that's the 9-period exponential moving average, that'll suggest that the 17,830 level is going to be some kind of a resistance that we've got to watch out for in the weekly chart. I'm also watching the MACD and stochastic, which so far are not that negative. So it's going to depend on how deeply, how much lower this week the daily chart goes, and I've got 17,685 to 17,603 as key levels on the left side of the chart that should be support that has to hold. We take that out, and that's very negative because all of a sudden the 200-period exponential moving average at 17,266 begins to loom. And the VIX index is also very interesting. I know you follow the VIX index. So the VIX index is actually in leg D in the daily chart in one of the shortest moves to the upside from a low bar with this number of legs. I'll show it here. You'll see that almost every time we've gone to an A, B, C, or D, even when we went from 1152, we went to 17.89, and so far the high is only 16, around about 1691. So this is something I have to watch really closely, because if the VIX index this Friday, at the close on Friday, if the weekly chart says it's about to close above 16.45, let's call it 1650, that'll say it's the first time in over a month that the VIX index is showing that the selling pressure has been sustained all week. So I'm trying to put the whole thing together, and so far what it's saying is that through the different sectors, there are still some very weak sectors. Some sectors are trying to hold up, but most importantly, the sell mode in the daily needs to translate to a sell signal in the weekly chart, and I will only know that on Friday, and that really depends on where we close, how far under or above the 9-period moving average. So I like to go step by step. So we're waiting to see if I get a sell signal in the weekly chart, because that'll probably inaugurate some kind of further selling that goes into the following week.
Now, you talked about the Dow. What about the NASDAQ
Yes.
and the S&Ps?
So this is very interesting. In the S&P, I had a caller on my show this morning. We were discussing the S&P. So if anyone wants to listen to a very comprehensive analysis of the S&P, it's best to listen to the show. But what I'll say briefly is that the S&P, in many ways, the price performance is weaker in the daily chart. But the weekly chart itself, weaker in the daily chart, but the weekly chart is the one at 21.959. That high, that all-time high, was a peak C. And I'm not sure how it's going to work out. Invariably, we get to a D, especially at all-time highs. But that's something that I have to try to put into place with everything else. So what I've done now is I've looked at the daily, and the daily is the most important, and that would lead to what I can do as an assessment in the weekly, because absolutely 2041 was the low back on the 9th of February. Looks like we're going to get there. We're getting there in a very short period of time, and that will tell me about the weekly chart. So far, I'm doing the daily. Daily's in a sell mode. Sell signal is probably coming up in the weekly, but I'm still at peak C.
Basil, thanks so much, man. Have a great one. Have a safe one. Look forward to the show tomorrow.
Thank you very much, Tom. Have a great evening.
Stay right there, folks.
You know
Come
what's
right
cool?
back.
Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionics, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now is down 288. You get the NASDAQ off 72. S&Ps are off 30. As we get into this close, it's going to get really interesting. So if we go over, let's first off go take a look at this E-mini, because see, what we do have ESM5. The E-mini itself, okay, intraday. Now this happened yesterday, but your intraday ABC structure down is and was the 2043 inside this this number, and we basically hit it. So I suspect, the E-mini itself, more than likely, you're going to see some sideways move here as we close up. It doesn't necessarily have to go low or wide. When you hit a ABC structure, whether it's up or down, they like to do something other than that on a basis to build more cause. That's what this shakes out to be. We go over to the diamonds now, this is where this is going to get interesting, though, because diamonds. Okay, so if we take a look at the diamonds, and the diamonds, of course, basically trade is the ETF structure for the Dow Industrials. We've done 5.1 million shares. Friday it did 7 million. So you're not going to get the ABC structure down, the actual definition of it. What we do have, though, is this, is that the diamonds themselves, the leg that we just did actually at 15.20, we got a little juice underneath it. And this leg right here has a little juice underneath it. So the diamonds do want to make that run for that 176.89, which is the low. The real key is going to be as it gets down into that level, are you going to have expanded volume and bottom line is that that's just going to bounce off that baby. And the Dow will hold this 286 to 290 area. Inside the NASDAQ composite, the composite itself is trading at 48.71. The composite has a long way to go to get down inside the lower range. The lower range in the composite is 48.10. Now, the 3 Qs, that's a different ball game. The NDX 100, okay, which has shown monster strength, is inside the lower range now. Putting juice into the NDX 100, even though it's down 71 bucks today, is that you have NVIDIA is up 46 cents, Citrix is up 30 cents, Vipul is up 3 cents, and you got Garmin up 18. Taken away from it, on the way down, you have Seagate is down 258, Micron is down 98, you get Dish Networks down 255, and Autodesk is down 202. Inside the Dow Industrials, what's the strength inside the Dow versus the weakness inside the Dow? Let's go take a look at that baby. So inside the Dow Industrials, what we have is this. There's only one stock that's positive right now inside the Dow. That's DuPont. DuPont is up 1 penny. How's that? Now, these would be the leading stocks, even though the Dow is down 280. You get Pfizer is down 9 cents. Johnson & Johnson is down 73. Walmart is down 58. These are the laggards. These are down the most in the Dow, dragging it down. You got Intel down 105. You have United Technologies down 388. Goldman Sachs is just getting smoked, diced, the whole ball of wax. That's down 471, and J.P. Morgan is off 137. Let's go over and take a look at these financials. You know what's intriguing here, folks, is that with the aspect of rates going higher, the banks should be in a situation that they would be able to make more money because of the spread between what they don't pay us to put money in the bank and what they basically pay or what they want for loan structures. Bottom line, Goldman's at 183. You have 2 separate swing lows it wants to go after. And the swing low there is 171. You're at 183. So if we take a look at the XLF, what you're going to see is that the XLF is getting basically dragged lower by many of these financials. We're down 45 cents. We're trading at, let me put this on a daily for you. Okay, so right now we're trading at 23.89. Your first swing point is the swing point that was established February 2nd. That swing low is 22.89. So that's a point down. The big number though is 21.55. 21.55 is the swing low established out there October 15th. That swing low, which is October 15th, that's crucial to wrap your head around, folks, because that's where this market does want to trade to. And one of the Tigers just brought up something, no doubt, in the den. And what the point is orderly selling. There's been orderly selling. Well, guess what, folks? Orderly selling does not equal market lows and or bounces. Doesn't happen. The only way you get market lows is panic, and the only way you get a bounce is very fast selling. Because and Mr. Bill's absolutely right, because you know why? There's no fear whatsoever. Zero fear. The down tick out here today only went to minus 941. So that what that's saying is that no one is selling, number one, and no one is fearful. And the VIX is only up $1.26, so that's nothing. And so what does that set up? Guess what? That sets up lower prices, because the market's job is not only never done, but the market's job is to take the most amount of money with the most amount of people in the least amount of time. And I suspect as this downdraft gets going, that's what you're going to see. Some of the high volume stocks out here, let's see which this is. Okay, so we have put the S&P up here. This is what you have happening. You had Apple down $2. We got Facebook off $1.70, which is nothing, by the way, either one of them. Citigroup, though, is down $1.46. eBay's off $1.53. AIG's down $1.45. Some of the Dow stocks, they're getting hit pretty good. You get IBM off $2.25. That's been a dog, no doubt. Boeing, which has been a high flyer, that's down $1.90. We have, let me put this baby up there. We have, let's see, Disney's down $183. Oxy's off $87. Intel, of course, was one of the big ones. Inside the oil patch, what you have Exxon off 67, Chevron's off 89, Apache's off 109. Big numbers there, no doubt. If we go over to the actual oil contract, let's take a look at the oil contract, because what we have had out here, the oil contract's down $1.38. CLJ5. So the oil contract today is trading 48.63. You have 337,000 contracts. That's actually light contracts. So your swing point here is 47.80. You're at 48.62. So first we'll go after the swing point. The swing point we're talking about is the swing point from February 20th. And there's a lot of volume there. So it's going to break that baby first before it will go after the swing low out there of the 45.07. We'll see where this whole baby does shake out. King dollar, no doubt, that little king dollar, she's pushing that 101, and she wants to get to that 101 with a vengeance. Euro, let's go take a look at the euro, because, summer's coming. Bottom line is that euro, you can basically get over to the Europe and have a blast. Okay, you'll be rich. In the last 6 months, so check this out. This is wild. We've gone from 130 to 106. You take a look at this, and we're going to put this on a much longer term chart, and what you're going to see is that you're in an aspect that, forget par. This is basically saying that the euro is going to go to 95. And once you get into 90, see, there's no support whatsoever, even a par. There's nothing there. When we had gone up, folks, in 2002, we started out at 85. It just went straight up to 119. So your correlation with that is that there's no support in the middle there. There's absolutely zero support. So, oh man, this is going to get weird. You know why? Because when Dave and I were doing the show on Friday, I'll go back to the dollar a second, but when we were doing the show on Friday, see, on the dollar also, even though the dollar's a to B equals C to D, 101, but that's a 1-to-1, there's nothing stopping the dollar from going up a lot higher than 101. It's a mind blower, because what is on the table is 121. 121 was the high of 2002. And the way this euro is trading out right now, let's see, 96, it could slow down. But it only traded at 96 for 4 months. Let me pull this back a little bit more. This is serious business. This is some serious vacation time, folks, in the Amalfi Coast. No doubt, man. You stay right there, folks. We'll be coming back. The Dow's going to make that run to see if it can basically blow away that down 300. If you get the blow away of down 300, folks, even with 15 minutes left, it'll go 350. It won't sit 300, because they've been trying to defend 300 all day long. The Dow right now is down 289. Nasdaq's off 71. S&Ps are off 30. We're going to be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. Dow right now is down at 289. You get the NASDAQ off 75. S&Ps are off 30. And when you do take a look at percentage-wise, it's still small percentages, folks. The Dow is 1.6. NASDAQ is 1.5. S&Ps are 1.4. Let's go over and we'll take a look at the XAU and the HUI. In both cases, folks, these things want to go after their lows. XAU, now they're coming after their lows with lighter volume. And there is a difference between the physical gold and the equities, and this is what it is. The XAU right now is trading at 63.47, and what you have is this. You have two separate swing lows. The December swing low is 62.94. Then you actually have the low, which is in November 5th. Now, what I expect you're going to see here is this. I do expect we're going to go into that low of November 5th. What you should get, and what we should get, though, is some decent information how we come into the 62.94 area. That is the December, because if you're a bull in that metals market, what you want to see it going in there with lighter volume. We've had lighter volume, and that would set up that your probability would go higher, that you could absolutely spike the low, but you'll get a rejection of lower price at the 61.39 area. That's in the XAU. And the HUI, what do you have? And the HUI, the way it's set up, same type of setup. The HUI is showing more strength. And what you have inside the HUI is this. HUI is trading out at a price point of 158.35. Also coming in with lighter volume. The swing points on the HUI, the actual swing of November, is 146.01, which is down another $12. The December one is 150.41. So it looks like the first one that would have a chance to reject lower price is going to be the HUI. And we'll see how that shakes out. Once that happens, if in fact that happens, what you're going to be looking for, if you're in that market, then you're going to be looking for not only the rejection of lower price, then you're going to be looking for a wide price spread, accelerated up move, which will show a sign of strength. You get that, then you'd be buying the next retracement. That's how that baby would be shaken out. Let's go over and we take a look at Big Blue for a second. IBM, they continue to buy back shares, but guess what? It can't handle it. You just can't do it. We're at 158, and this thing just loves the 150s, folks. So we'll see how this goes after the 155. 155 is one of the high bars of the low. That's when it had trade down to 149.52. That one's going to be important in the context of how we're getting into those lower levels. Volume-wise out here, what we're going to have is we're definitely going to have expanded volume. The key is going to be how much was that expanded? It's not going to be that much, really. 750 we're probably going to do on the NYSE, and we did 740 yesterday. NASDAQ, what we have on the NASDAQ, NASDAQ's going to have some juice. NASDAQ has already done what it did yesterday. NASDAQ is going to basically bang into about the 1.750 mark. That's how it looks like this baby is shaken out. We go take a look at the small caps. Now, the small caps, folks, have come off the high. They got some juice, but these things are a little tricky. You're at 120.23, so you're inside the range. The small caps are going to need a lot more volume to get lower, and this is why. Your swing points on the small caps at these swings that were generated in February and in December, those swing points have like 60 million and 40 million shares. We're only doing 27 million there. So that expansion is an expansion of volume on the way down. We made a high out there with 29 million, but it's certainly not, the small caps are showing that there are not a lot of sellers inside the small caps. That's how this thing is shaken out right now. There she goes. So here's the 300. The 300 got broken. Now, when you get a 300 broken, folks, now, so picture this. The bulls and bears, okay, fight all the time, folks. There's certain levels, though, and they don't mean a thing, okay? It's not that the 300 meant anything. But what does happen is that as energy gets expended and as the fight goes on, when the fight loses, in this case the Dow just lost, okay? Bottom line, you're going to see a very fast run down to, we've got plenty of time, we get 4 minutes. You'll see a run down to 350. You know, that's just a throw the towel in, fast, furious, all of the above. So we'll see how this shakes out. And it has to do, you know, the market is just like, you know, basically working out, folks, okay? You work, you work, you work. If you're defending a certain line in the sand, guess what? When that line, when you either make it or break it, what ends up happening? Bang! You get wide price spread, accelerated volume, whether it's on the way down or the way up. What does happen is that the longer that you've had that fight, and this fight that's been going on in between the bulls and the bears have been going on since noontime today. So bottom line, S&Ps broke. They broke with volume. We're at 2045, and this is where the longer point is when you get these ABC structures together. This little baby, I believe it was yesterday. Wasn't it yesterday? I got this, I believe I got this 4-3 number yesterday. Well, maybe it was the small. I think it was yesterday. I think it was an intraday ABC structure on the way down yesterday, and that was the first one, 2043. That was the one-to-one ABC structure on the way down. Bottom line is that you don't have any fear out here. There's really not a lot of damage per se. What you are going to see, though, you're going to see basically lower prices, expanded volume. Bonds, folks, next hour we're going to have some fun with bonds because the bond market right now, this is absolutely blowing my mind, but the bond market, like the 10-year is up 15 ticks at 126. I want to see this thing get into like 127, 28, 128, and it's going to be a sell. This is going to be really wild if, in fact, that's what we have happening because this looks like it's going to be a complex ABC structure on the way down. We already broke the B point with volume. And when you break a B with volume and then you get above it with lighter volume, it just turns into a complex ABC, whether that's down or up. Then we have 2 high volume days off the high. So that sets up that, guess what? Bonds and rates actually want to go up. And let me tell you something. On a fundamental basis, it's going to blow everyone's mind if the market's going down and the Fed actually goes up on short-term rates in June. They're not going to do it this month. I can't see it. Not even close. So you get March, you get April. There's no meeting in May, by the way. Okay? This is Tom O'Brien. This is TFNN. You stay right there, folks. We're going to be coming right back. Dow is down 306. Nasdaq's off 78. S&Ps are off 32. We're going to be right back.